How's everyone doing today? Today I wanted to make a video, a quick portfolio update, of course, show you the dividends I got for February, and then talk about investing during a recession or during a market crash that could turn into a recession and how you handle that because um, when the market crashes, it's very easy to make bad decisions that will have an impact later on your finances. Okay, so first, here's the portfolio update. So for the first time in a long time, um, I'm actually negative in Robinhood. I the graph kind of says it all. I haven't. This is just from the market drop. I went all into the S&P, and it dropped about 11%, and that wiped out my gains. But that's fine. Um, it's very important that you hold on to everything that you previously had. And actually, what's preferred is if you buy even more, right? So if you can see here, I'm transferring more money in. I'm buying stocks every day, March 5th, March 5th. This was 4 hours ago. I'm just continually, you don't want to put all of it in at one time, because then you could put it all in right here and the market's still going to plummet. So you want to put some in here, you want to put some in here, you want to put some in here, and you just want to keep putting money in. If it's green or red, it doesn't really matter to me. I just know that it will go back up. I don't think the coronavirus is going to cause the end of any of the companies that are in the S&P 500. I don't think it's going to cause the end of civilization. It's just a temporary setback. It just kind of creates an opportunity, really. This is what it is. It's an opportunity rather than like this big problem that we're all having, right? It's really more of an opportunity. For those that are sick, of course, it's terrible, but um, for investors and stuff like that, this is a good opportunity to get in the market if you're not already in it, or to buy up some shares that are well priced. M1 is the same story. Um, you can see the big market drop here. Real estate actually kind of rallied a little bit back up, and that was the spike over here, and it's back down. But again, in this portfolio, all I care about is the dividends. I don't really care about the market. Of course, I'm not going to buy companies that are going to be depreciating in value, but I don't really care if they go up or down in value. I don't care what other people tell me they're valued as. They're valued to whatever I think they are, and however much they're going to pay me in dividends. And I'm not worried about the how much I can sell it to another person for, which is all the market gains. It's all market gains are. A couple industries that I'm keeping my eye on is tech and finance. So these two are down considerably, and it's a very good time to pick up some shares. As you can see here, I increased my finance holding, and yeah, just look at this. JP Morgan is down 40%. Like it's a little ridiculous. You really think the biggest bank in America is going to go under because of the coronavirus? I just look at this as a buying opportunity. So, finance and tech, those are the two industries that I'm really looking at, and I recommend you guys look at them as well. Um, Besides that, just keep putting money in your whole portfolio. Maybe you want to buy a couple more, like maybe put your allocation for tech maybe like at 8% and put finances at like 15% or something. Just make them a little bit higher during this time, and then whenever the market rebounds, you can set it a little lower. But I think those two industries got hit hard, and they're not even really associated with the coronavirus at all, right? You would think like industrials, which have manufacturing and supply chain in China, would get hit. Yeah, you'd think maybe healthcare might get hit because they're going to have a lot of charity care and they're going to be losing money. But JP Morgan, I don't see why JP Morgan is down 40%. So that's what I wanted to share with you guys. I'm down just like everyone else, and I wanted to talk about discipline. So it's when you're looking at this number, you're looking at your lost $185 for putting your money in this stock market, and you're losing money doing it. This is short term. very short term. You have to have the discipline to understand that I'm going to keep putting money in it no matter what the market does, and I'm going to ride the wave back up and keep putting money in it when it's up too. Whether it's green or red, you just have to have the discipline that I'm a long-term investor. I'm not going to sell what I own, and I'm going to keep putting in more money, even if the stock market drops down 80%. I'm going to keep putting in money. That's the key here. The stock market, from a historical perspective, that is the best strategy. So discipline is absolutely key. If you don't have discipline and you just kind of act on your emotions, you're gonna lose money because times like this, you're gonna sell. That's why everything is going into the red, is because everyone is acting on their emotion and selling for no real reason. I mean, the coronavirus is a slight reason. I can see a maybe 5% dip in the market for a couple months, but 15% is outrageous. So I also have my account statements in, and the dividends were just as expected. February was a little bit under my forecasted line, but that's fine. It was including December, which was very high. I don't have that many data points. So this is a trend, though. The trend is still going upwards, which is all that really matters. The value, there you go, you can see it. Robinhood, even better. I sold a lot of shares, but I still have the S&P, and this is going to get, just forewarning, this is going to get a lot more jagged. It's going to be down, up, down, but I'm not really focused on dividends with this one. I'm more focused on this portfolio value here, and I just want to make sure that this keeps going up. So that's really all I have. Yeah, I think the coronavirus is not something to worry about, and just don't act on your emotions and just focus on discipline. I'm going to continue to put money in, okay? I'm continuing to deposit day after day, every day, buying at least one share in Robinhood and putting at least about $50 into M1 every day. And I just try not to look at it. It does hurt that you are losing money as you keep putting more money in, but you just have to understand that your dollar cost averaging down and it's going to go up. So just stay focused, guys, and stay disciplined, and just don't sell right now. That's the best piece of advice I can give you, I guess. So take care. I'll see you next time. Leave any comments on any videos that you're interested in, and I'll try to make a video on it. We're learning a lot about, I am in the MBA program, and we're learning a lot about Fisher's model, about leverage, leverage ETFs. I can do a video on that. We're learning a lot about, the capital asset pricing model. So anything around those, just let me know. Systematic risk, unique risk. If you have any questions, just leave it in the comments, or any suggestions, just go ahead and leave it in the comments. And I'll talk to you guys next time.